Hey guys, how's it going? Welcome back to another video. Welcome back to another week where you have to sit on your hands and wait for the backside. Thursday and Friday give out the best trading opportunities and it gives you high probability setups. Why does it do that? Because if you let Monday, Tuesday and Wednesday play out, those days are usually clues and signals which usually tells you how the market is going to behave the following day. So as you can see, Monday is at the low and the high for the week, and we can also see that Friday, that's when the original move started. This move started on Friday and continued trending upwards throughout Monday. Monday closed in breakout. This is the close of Monday, and it closed above the high of Friday, meaning it closed in breakout. So let's say closed in breakout, and this is Monday's range. This day here is Tuesday. Tuesday closed as the down day. It wasn't a first red day, even though it acted like a first red day. It wasn't a first red day because the market's been pushing up since Friday. We are closing in breakout, and on Tuesday it just simply wanted to rest. So this is the market taking a breather from this massive move to the upside. So Tuesday, we can call it a rest day plus down day. So Tuesday was a rest day, down day, after this massive move to the upside on Monday. Wednesday is usually the signal day. That's when the market usually gives out the best signals. Wednesday is day 3, midpoint range of the week. And on this case, we have a first green day. As you can see, the market closed above the open. And the next day, on Thursday, we have the first green day signal day opportunity play out in the London session. I only trade New York session, so I clearly missed this trade. But as you can see, this is the high of the week, and it's also the high of the month. As I told you before, this is the new month. This is June, this is May. This is the high of the week, also the high of the month. On Thursday, price played out the first green day from Wednesday into London session, and when we come to the screen, when I come to the screen on New York equity hour open, which is 9:30, which is this vertical line here, we see price break out from the high of the month, the high of the week, but fail. Markets do two things: break out and trend, or break out and fail. If it broke out and trend, the market would have broke out, came back and continued trending. But the market came up and reversed and failed and closed back within the range of the week. This is the range of the week. It closed back within the range of the week. We can call this a first red day. Closed back within the range. What does this tell you? So as soon as this day closes, you should be automatically thinking sells. You should be automatically thinking the market wants to go down to the other side of the range. It's back within the range. So Friday is the closing range of the week. So this is Friday. So Friday New York session equity hour open, which is just here. But before I go forward, I want to say that this could have been a nice shorting opportunity as well. As you can see, this doji candle at 9:30 equity hour open, we're also closing below the EMA, and we are also trading below the open of the day for a sweet move to the yesterday's low. So this is yesterday's lows, Wednesday low, and this market is just coming up from the high of the day, high of month, high of week to yesterday's low. So if you missed this trading opportunity, there was another trading opportunity on Friday, because Thursday was a signal day. First red day, closed back within the range. So we're automatically thinking we are shorting. And as you can see, we have a pump and dump setup. We have a pump, a consolidation, that's the coil, for a dump back down to yesterday's low and also the low of Tuesday, which was also the low of New York. So what happened is, on Thursday, this trend line was formed. A lot of buyers are in the market. Everyone's buying this market. As you can see, this is a perfect trend line. Retail traders are licking their lips, thinking the market is going to go back up to the high of the week. But as you can see, from this pump, the market broke down and coiled. So let's go to the 5-minute time frame so we know what we have within our timing window. This vertical line here is the New York Equity Hour Open. And what do we have on the Equity Hour Open? We have a coil on yesterday's close and today's open. And we also have this mini triangle forming, a descending triangle. And we also have a pin bar here and a pin bar here. But this pin bar occurred, my bad. This is the Equity Hour Open. This pin bar occurred before the hour opened, and you could have entered your trade within here. But you got to be careful if you're entering your trade within here, because you can be easily wicked out by these massive wicks that are happening. So make sure you adjust your risk and your stop loss. You could have shorted the position anywhere around here, stop loss just above this pin bar, and you could have targeted the low of the day, yesterday's low, or you could have targeted this low right here, which is the New York low from Tuesday. So I hope you learned something from this video. Please like and subscribe for more of these videos. Thank you.